Welcome back to the Market Day Report. Thanks for joining us here on a Monday. I'm Marlon Bowling with you. We're going to take a look at how the grain markets are opening up today to start out a new trading week. And we'll bring in a little extra help along the way as well. In fact, let's go ahead and go to the phones here this morning and check in with Dewey Strickler. He's with AgWatch Market Advisors. He's based in Franklin, Kentucky. And Dewey, I hope you had a good weekend out there. I assume a lot of folks got quite a bit of field work done in the Corn Belt.
Yeah, they did. Got an awful lot done here. We're probably going to be looking at corn be about, maybe 90% done with the planting here. Soybeans around 50%. Looks like we may have a few showers in some of the western areas here this week, which may slow bean planting down. But all in all, the corn and soybean crops are off to a good start.
So now we, this afternoon, we'll get a new report from USDA for the crop progress and condition report. What do you expect those numbers to be for the corn and soybean planting?
Well, I tell you what, not to give you a smart answer, but I can tell you what they'll be when they come out here. I never try to guess what the numbers are going to be initially here. I would say that they're going to be probably something that's going to be comparable, maybe a little bit better than last year, because right now the conditions have been pretty good in most areas here. So I know the trade is anxious to wait and see what these numbers come out, because it gives us a little bit of an idea of what we can look at as far as a yield potential.
I did hear this morning on my Commodity Wrap show on Rural Radio that there was a lot of progress made in the central part of the Corn Belt. As far as soybean planting heading into the weekend there with the warmer conditions, soil's finally dried out, but they said that as you got toward Kentucky, they said the conditions seemed to get a little damper, and they said they weren't able to make as much progress, so we'll have to watch out for the update. Dewey, I want to take a look here at the opening market prices with you and get your analysis here. Let's look at the corn market first to see how we're starting out. Right now, July corn is up 3/4 cent at $3.95 1/4. We have been higher and lower coming out of the overnight trade. We have December now trading unchanged at $3.99 3/4 per bushel. That's just one tick under that $4 benchmark. Soybean trade, we have July now trading at 10.66 1/2. That is under pressure, down 7 3/4 cents this morning. And we have the November contract 14 lower at 10.35 1/2 per bushel. Your thoughts?
Well, I'll tell you what, there's a thing on the Commitment of the Traders report that really bugged me Friday, and that is your funds are long 995 million bushels of soybeans. That's 30 million bushels short of the record set back in September 2012. And what is really intriguing is that your commercial traders are short about 1.3 billion bushels of soybeans. When we have seen the commercials and funds at opposite poles like that before in this type of situation, prices have eventually fallen 23% or better.
And we did receive news this morning. USDA reported 20,000 tons of soybean oil sold overnight to unknown destinations for the current marketing year. In other words, they have to get it out of here in a hurry. 140,000 tons of soybeans sold to unknown destinations for the next marketing year. So you would think that would be supportive to the trade. Maybe that's why we're seeing not as bad of a loss on the nearby contracts on the soybeans. I'd want to get your real quick thought on the wheat trade. On Chicago wheat, we have July down 1 3/4 at 4.66 right now. Kansas City, we have July now trading at 4.49 3/4 per bushel. That's up 3/4 cent. Very quiet, down 1.50 in the Minneapolis market. Do you see much happening in the wheat here with the harvest now getting underway in Texas?
I think it's pretty well going to be a downhill struggle. We're looking at exports are less than desirable here. And, of course, we're looking in the beginning stages of harvest. I could see July Chicago wheat going down into about the 420s.
Okay, well, Dewey, we're going to pause for a little break, and when we come back, we'll analyze what's going on in the livestock trade after that big cattle on feed report Friday afternoon. We'll be back in 1 minute. Back with you on the Market Day Report. We're talking right now with Dewey Strickler. He's with AgWatch Market Advisors in Franklin, Kentucky. And now we turn our attention to that livestock trade. And Dewey, the last half hour, I was discussing the rather shocking number that we got from USDA in that cattle on feed report that came out last Friday. Let's review those numbers for our viewers that may have just tuned in, or our listeners out there on rural radio. The on-feed number came in at 101%, and that would be compared to the average trade guess of 100.1%. Now, the placements for April came in at 107%. That was a whopper. The trade was only looking for 98.6% of a year ago. In other words, they were looking for a 1.5% reduction when we had a 7% increase. And the marketing's number, 101%. The trade was looking for a number around 101.6. They were calling for, of course, a negative reaction when you have placements that high, that much above expectations. So what are they doing? Well, let's go to the board and find out. Here we go with live cattle first. And right now on the board, we currently have June down 205, trading at 119 even on the day. August down 243 at 115.02 per hundredweight, now 115.15. We have the October down 212 at 114.98 per hundredweight on the feeder cattle side. Here you have your August contract down a whopping 327 this morning at 144.65, and that is even $1 off of our earlier low this morning. So we had been close to limit down on the open, apparently. September feeders down 292 right now at 143.10. Dewey, one analyst I spoke with this morning on my rural radio program, was making the comment that they thought we would probably see a knee-jerk reaction and then things would have to settle down maybe that first half hour of trade, and then he was interested to see what would happen after that. What do you think about this reaction here?
Well, first of all, when you do look at your cattle market on your June fats and also on your August feeders, we had a gap lower here this morning. So I think the trade's going to be looking here, first of all, later in the session. Are we going to get back up and try to get up into that gap area or not? If we don't, you're going to be looking at the cattle market is going to continue to drift on lower.
Well, of course, we had a gap on the charts. If you look at the June live cattle, I believe, it was a few weeks back, and we actually closed it, I believe, Thursday here last week. And so analysts were actually kind of tickled to see that they had finally accomplished that and filled that gap on the charts. But now, with that report, they're actually gapping the other direction, and looks like it may be a continuation to the downside now.
Well, that's true. There are a couple of friendly points, though, in the report that came out. One, it did show the number of cattle on feed, say, for 120 days or longer. We're down about 5%, and also weights are down.
Well, with action like this, do you think that that's a market where they can actually strip out the week longs?
Well, I think that they're doing that here right now because, you know, we had a little bit of positive action here late last week, and, of course, we've pretty well have done 180 degrees down here. So, yes, we're taking a few longs out. I think maybe tomorrow we'll probably, you know, like I said, let's see if we get up and start filling the gap area. And if we do, then I think you might see a few brave souls come back in again.
All right. Well, Dewey, thanks for the comments. Appreciate that. I do want to take a look at our lean hog trade here this morning. And on the lean hog futures, right now we have the June contract down 55 cents. So far, it's trading at 79.30. July down 70 at 79.55 per hundredweight. August down 43. So they're grinding lower, Janet.
All right. Well, thank you very much, Marlon.